I can't think of a cool intro, so I'm just gonna tell you guys we're about to make another video on a pretty cool RWA project in Polytrade.
Ha! Funny. Like, no.
Guys, Polytrade is a RWA platform where you can tokenize, buy and sell, use what you tokenize as collateral, invoice factor, and lots of cool things. So per usual, we're gonna go through the docs, we're gonna go through the white paper, we're gonna go through the team, we're gonna go through the socials, we're gonna go through the tokenomics, do a platform walkthrough, and at the end, let you know if we would use the platform or not and why. What the fuck?
Oh man, let's do it.
All right, guys, starting at the blog at the bottom, it says Polytrade is the world's first marketplace for tokenized real-world assets, bolstering partnerships with industry titans like MasterCard, Polygon, AlphaWave, and Matrix partners. The marketplace revolutionizes asset trading and investing by consolidating a diverse array of tokenized assets, spanning credit, real estate, commodities, collectibles, art, intellectual property, creator royalties, and luxury goods from various chains onto a unified platform. So we go to the top here. Just going to go through a couple of the key things here. So how does this work? It says the market serves as a comprehensive platform uniting a diverse array of tokenized assets under one convenient roof. Kind of like Boson Protocol, but just a little different. I actually like this one more. Go watch our video on Boson if you haven't already. But it says within the marketplace, users have an opportunity to explore a vast selection of tokenized assets. They can seamlessly compare different assets and engage in transactions, whether it be purchasing, selling, or simply browsing RWAs.
And it's important to note when they say RWAs here, guys, they're not just talking about, real estate, bonds, like those types. They mean it in a way more broad sense where they're talking about anything. Like if I were to put my special water bottle inside of the marketplace for sale, for example, that would be considered an RWA. So just to make sure you guys are following that correctly.
Yeah, that's a good point. And it says here, assets available on the marketplace are categorized into two main types. So you have discovery assets and secondary assets. Starting with discovery, these are assets users can explore, consider, and potentially buy or acquire. They're accessible through the Polytrade seamless integration with leading protocols such as Uniswap, Balancer, and OpenSea. So Uniswap and Balancer are decentralized exchanges. OpenSea allows you to trade NFTs.
So right. It's funny that they mentioned OpenSea because effectively, like, that's what they're doing for RWAs. They're trying to create like an OpenSea type environment for RWA.
Yeah. So it's some of the protocols with assets in discovery mode. I'm not sure what discovery mode is, but Goldfinch, matic, Ghana,
Unicuda. Say no.
So disrespectful. Say no.
Oh man.
So they named a company and then places. Interesting. Anyway.
So where's 4K at? Say no.
All right, secondary assets. This category encompasses assets native to the Polytrade marketplace itself. So they're listed in their native ERC 6960 standard. And this standard accommodates various token standards such as ERC20s, which are essentially, Ethereum tokens. I forget what ERC stands for. It's Ethereum request for something.
Ethereum request for comment.
Yeah. Ethereum request for comment. 721s, those are, I believe, NFTs. 1155s are like SFTs. All right, so 4 things you can do on the marketplace right now. All right, so 1, you can buy assets, and it shows you how to, find them. We're going to do a walkthrough so you'll be able to see, but you search for the asset and click the buy now filter. It shows what the UI looks like. I actually applied to be able to look at it, but I don't think I got approved yet, so I don't even know if I'll be able to show you guys. But anyway, it shows you all the parameters of the asset, like asset valuation, i.e. price of the fraction. Cool thing about this platform, you can fractionalize what you have, so you don't have to sell the whole thing. So you can split it to as many pieces as you want. Fraction value and fraction available, right? And then you can choose to accept the price or buy a whole fraction, like I just said. Adding to cart, pretty self-explanatory. It show you how to buy the fraction, how to send an offer. So if you want to negotiate on the price, you can send the offer, right? And then if you want to sell or list an asset, they walk you through how to do that as well, right? They show you how to wrap it, aka tokenize it, how to complete it, all that stuff. and then how to redeem an asset. So in order to claim the underlying wrap token or NFT from ERC 6960, you must follow the steps here that they outline, which is essentially after you buy something, claiming it, right? I'm not going to read those step by step, but pretty self-explanatory. Now let's hop into the white paper and kind of give a top-down view. This was more about the marketplace.
All right, guys. So within that marketplace, they focus on trade financing as a core part of the value they provide to the consumers on the platform, or the users or the participants on the platform. And the area that they're focused on the most within trade finance is the accounts receivable / invoice factoring. And so they factor the accounts receivable, or receivable accounts essentially. And what that is, for those of you who've never heard the term or unfamiliar, let's say Vince wants to buy something for me. I invoice him for that product and I'll send him the product. So that means I usually have to wait, 60 to 90 days, long time, to get my money, essentially. That's what an accounts receivable is. Invoice factoring comes in and basically they'll pay me the cash, the invoice amount at a discount, which means they make some money. So they'll pay me the cash based on that invoice. So that means I don't run into liquidity constraints moving forward. And so I keep the cycle flowing. And once those funds come in based on that receivables account, then that company would eventually get paid back. So that's effectively how it works. And so this is their number one focus when it comes to transactions within the marketplace.
All right, moving on to chapter 3, the Polytrade platform. So the white paper was good. They give a whole history of trade finance, because it sounds cooler to say finance over finance. But we're just going to dive into the actual platform on things we didn't cover in the actual app. So it says here, one of the key challenges in trade finance is identifying the quality of the underlying asset. This would mean understanding the financial strength of the buyer using the financial data points and other market checks. These data points and the history of payments will be maintained on-chain. The protocol will algorithmically decide the rating of each asset that will weigh in the collateralization of the asset and the interest rates against the assets. So let's say I wanted to tokenize this phone. They basically have a way of determining the value of that phone through algorithms, so that once you go to borrow against it, it's a fair price. How they do it, I don't know. It algorithmates. So now on the borrower side, similar to asset evaluation, borrower evaluation standards will be defined by the protocol. While in normal trade transaction, the risk is limited on the borrower by their activity on chain, profile building, submitting financial documents will lead to algorithmic borrower rating. This rating will also be a factor in the interest rates which they're able to borrow. So now let's go on and talk about the risk management. So it says here, one of the key parts of risk management and trade finance is to not overexpose the protocol to a single asset or single entity. Because if that thing goes down, it can just cause a daisy chain of chaos. They really trusted in their algorithms here. It says this would again be algorithmically adjusted when a certain percentage of lending is hit against a single entity or asset. Then a hard stop will be placed until the existing margins are liquidated. Similarly, on the borrower side, rules will be built that the protocol is not exposed to single borrower risks. All right, so now let's talk about the core concept, supply and assets. Any user who has collateral in the form of an underlying invoice can come to a platform as a supplier of the asset. These assets, which are in CeFi, will be tokenized with the details of the asset and then made available to the liquidity pool. So if you have an invoice that you're going to get paid on, you can borrow against that invoice. Pretty cool. And then borrowing against assets, the supplier of the asset will have the ability to borrow against the tokenized asset, like I just said. The interest rate will be a function of the asset quality, borrower track record, and currency of borrowing. We already talked about the collateral value briefly, but it'll be pegged against a stablecoin after being tokenized. Probably going to use USDC, and this ensures that there isn't a significant gap between the collateral value in fiat and crypto. And I'm not going to go through all of these, but I did want to go through this one here, proof of reputation contracts for borrower and assets. So the protocol will put data on chain about the borrower and the asset. It will also algorithmically assign a rating to both entities. External validators can then use the same data and their own data points to further provide information about both borrower and assets. So, we have credit scores in traditional finance, but on-chain reputations aren't, a big thing yet. But they need to be a big thing if you're going to do any kind of borrowing and lending, and it's under collateralized, because you have to have some kind of way to prove, does this person have a high likelihood of paying back, paying the invoice, et cetera, et cetera. And they go on to talk about all the risks, the advantages of the platform. If you guys are thinking about buying this, I would definitely go to this white paper. Settlement of invoices, dispute resolutions, digitizing existing invoices. So now we're going to move on to the trade coins and tokenomics, and then we're going to dive into the actual tokenomics of Polytrade. So trade, which is their ticker, it talks about the use cases. So it's a mechanism to increase the trust between all parties involved in receivables financing. The tokens are the key payment instrument within the Polytrade platform. They'll be created on the public ledger, and they will serve two primary functions. The first one is to provide access to sellers. So sellers will be required to pay a specific amount of trade coins each year to access the Polytrade platform. The seller's financing limit will be determined in multiples of 100 to the value of trade coins held by them. For example, if a seller has trade coins worth $1,000, their financing limit will be $100,000. Paid access to the platform will serve as a check to ensure genuine sellers get registered on the platform. The second use case is reward usage and good behavior. So trade coins aim to reward all platform users, sellers, buyers, investors, validators, and financiers. The coins will help in boosting usage of the platform by incentivizing stakeholders to use the platform. The coins will also help in increasing the level of trust between different parties within the platform. For example, buyers who make timely payments will be rewarded with trade coins, and buyers with higher number of reward coins will imply greater credit worthiness and help investors in their risk assessment. So basically, they're doing a lot of things to keep the token scarce and creating ways for people to want to not just accumulate, but hold the token.
Yeah, as like the number of tokens that you hold is a direct correlation to your reputation within the system. And also, it just incentivizes transactions to go through successfully, which a lot of the times is that X factor that you need to severely limit the amount of unsuccessful transactions.
Now that we went through the white paper, what the trade token is used for, let's see if this is a good investment. I like the platform, but a lot of times in crypto, the tokenomics aren't good. It doesn't matter how good the protocol is. You want it to have good tokenomics. So if we go over to CoinGecko, the market cap is only 25.5 million. Super small. And I think this thing's gonna fly as RWAs continue to rise in the bull market. But you see the fully diluted valuation is 69.5 million. So you have only like 40-something% of the tokens unlocked. We need to see how the rest of these tokens are coming onto the marketplace. All right, so here we are on chainbroker.io, and it shows the vesting schedule. So it looks pretty evenly linear. You can see the next major unlock is going to be August 20th, a day before my birthday, and it gives you pretty much all of the parties that are going to receive tokens in the unlock. It shows their vesting description. So there isn't like a date where a super fuck ton is going to be unlocked. It's just every couple months, it looks like the same amount is going to be unlocked, right? So I've seen better tokenomics. I've seen worse. This is kind of just like in the middle. Like I said, it's not a big unlock coming, but it's also not a time where we don't have to worry about none getting unlocked. So it's just something to keep in mind. And then one thing I like about Polytrade is they have a pretty wide ecosystem of things on the platform. You can see all the companies. So T-bills, they have Ondo on here. We made a video on Ondo. Private credit, Goldfinch, Clearpool, Maple, Centrifuge, made videos on all those. Stocks, media, community, real estate, chains, artists, others, like collateralized lending, commodities. It looks like they're gearing up. All right, so now that we went through that, let's do a platform walkthrough and look at some other things here. So you can see the first thing that they're advertising is their MasterCard, MTN partner, and SmartPath alum. Let's check out what that is. Okay, so MasterCard launches this whole MTN initiative. So MTN stands for Multi-Token Network. And the goal is to scale and secure blockchain technology. They're basically saying that this is a set of foundational capabilities designed to make transactions within digital asset and blockchain ecosystems secure, scalable, and interoperable, ultimately enabling more efficient payment and commerce applications. And Polytrade was one of the companies that they chose to be their MTN partner, and this article outlines it. MasterCard Obviously, they're right behind Visa in handling the most amount of payments. So it's pretty good. I'm not gonna lie, it's pretty good. So if we scroll to their website, pretty clean graphics here, as seen on, right? Talks about all the industries, goes through some of the partners, talks about what you can list on here, fractional ownership, da 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 da. Got some testimonials from the co-founders of Clearpool and Polygon, backed by some investors. I don't know any of them. And then when you hit open marketplace, like I said, I applied for a profile, but I never heard anything back. Polytrade approved my fucking profile, bro. Yeah, so I won't be able to show you guys the actual platform, but at least they have screenshots on there. And if we click about us, it has the team members here. I like when a project has the team members docs. Feel free to like look up their LinkedIn's. Pretty good team. A lot of them have experience in Web 2 and Web 3. I think it's valuable to have both because you do have to mix it together. But I do like that they're all docs. I do like their backgrounds. And I like their advisors and the people that they're working with, you know, collaborating with other projects, RWA projects specifically.
All right, guys. Now, would we buy this / use this? Like, no. But, well, I wouldn't use it.
No?
Not that I wouldn't use it, but I guess I always go off of literally like myself right now. Like, I mean, theoretically, I would use it, but I just know I'm not going to ever use it. Like, I just know it. But I would be a buyer of it because I know individuals would use it. The marketplace model is always a good model. It's something that is kind of missing from an aggregation standpoint. Because when you think of demand, the more aggregated / centralized demand is, the more effective that demand sticks and the more effective it is over time. And so when it comes to marketplaces, especially for RWAs, I would be bullish on something like that because you're concentrating that demand. If you can concentrate that demand, you lock in that demand for the most part. And so I would be a buyer of it, but I wouldn't be a user of it. And that's coming from the perspective of like literally me, guys. Like right now, like I don't feel the need to use it. But let's say if I had an Amazon FBA store even right now, this would be something I go ahead and experiment with. Like, let me go ahead and like, you know, try to see how this would work for me in my business if I were to kind of move things to a more decentralized setting. And so I would use it there, but I don't have an FBA store. So, and I don't have products that I want to sell. I don't have products I want to buy from a decentralized marketplace right now. And I don't have assets that I want to tokenize at the moment. So I wouldn't use it for those reasons. And for those reasons only, I'm out. Like, nah. But yeah, I would buy it, but I wouldn't use it. What you think, bro?
I would definitely buy it.
Nice. Good thoughts. Everyone give it up for him.
All right, quiet down, guys. I'm trying to talk. Yeah, I would definitely buy it.
Nice. All right.
No, I would definitely buy it. I think it's going to fly with other RWAs. I do like this better than Boson, like I said, but Boson, it seemed like they had a better method for receiving the actual tangible item, or at least they broke it down better, like with the shipping and all of that. So it would be nice to see some more things on that. In terms of what I use it, like I remember we were looking at Boson. Some lady was selling a fishing expedition, some kind of sailing expedition. And I'm just like, that one seems a little bit more raunchy. This one seems a little bit more institutional, professional, all that. If I was in the position, because I don't have,
that is so funny.
yeah, I don't have like anything I gotta tokenize right now. I mean, I was thinking about tokenizing this remote, but I want to keep the light, so that's tough. It's like, nah, I don't have anything to tokenize or sell right now, so it wouldn't make sense to use it. But if I did, I would use it. Like, I am confident in the security. We didn't go through the audits.
Yeah, I would definitely use this over Boson if I were.
You had your chance.
If I was in a position of need, like I need this thing, I would use this over Boson. But yeah.
Yeah. So I would use it if it made sense. I am buying it because it do make sense, and hopefully
it does make sense.
It make me some sense and some dollars. Holla. But yeah, guys. Other than that, if you got value, like, comment, subscribe, share with a friend. A few of our audience members has been asking us about Polytrade, so we figured we go ahead and get her done. So we're trying to go through all of the RWAs, or at least all the good ones. If you guys got some other ones, let us know, and we'll cover them. And per usual, follow me on my personal channel at Crypto Noah. I already recorded my take profit strategy video and the yield farming video, so subscribe.
And follow me on my personal channel, J Mansion. I already did all this, so subscribe. So no, but yeah, follow J Mansion as well.
Yeah, the take profit video will be released a few days after this. But other than that, thank y'all for tuning in. We'll see y'all on the next one.
And wait. Okay, you can go ahead.